Good morning, everyone, and thank you very much for joining the morning market review. It's Thursday, it's the 13th of April. My name is Russell Shaw, I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. Just going to go ahead and bring up our disclaimers. First is the high risk investment warning. I'll keep this on screen for a few moments. Hey Raj, nice to have you on the webinar. Thank you very much for joining. Thanks everyone for signing in. Just want to confirm that you guys can see the screen, hear me, and see the camera. Okay, cool. Thanks, Howard. Howard's confirmed. Thanks, Raj. Yeah, Howard, I feel your pain there. All right, let's just bring up market commentaries disclaimer. I made a mistake yesterday. I said that we'll be doing the crypto minute today, but I missed it yesterday, and I got confused with the public holiday on Monday, so my apologies. We'll do it next Wednesday. All right, references, MarketScope 2.0, TradingView, and CME Group. Let me just bring CME Group in here. All right, so I just wanted to show you guys that the probabilities are still in favor of that 25 basis point hike on the 3rd of May. After the CPI release yesterday, it went as high as 75%, but it's dialed back to 66. I think we're going to get the 25 bips 3rd of May, but I'm of the opinion we're pretty close to the end of the hiking cycle here. And if we just take a look at the core CPI, core inflation, there is still stickiness there, isn't it? You can see it ticked up from 5.5 to 5.6 here. That was in line with forecasts. Importantly, and what we want to keep an eye on is the deceleration. Okay, so it's also showing signs of deceleration. So if it maintains in this sub-zero, then we're looking to see if we can get a resumption to the downside. So that's what we're looking for. There was some good news that came through on the inflation report yesterday, and that's in a component called shelter. Shelters with the rents and just the cost associated with shelter. And they've been very resilient, but they did show signs of increase, but at a decreasing rate yesterday. So I think the interest rates are starting to have an effect. And on a technical basis, we just want to keep an eye on this rate of change, make sure that it keeps showing deceleration. And when it comes down to 2%. This, just one final but an important thing to say around this chart is that it's not the Fed's preferred measure. The Fed's preferred measure is what's called PCE. This is CPI. PCE stands for Personal Consumption Expenditure, and it's based more on surveys rather than tracking a basket. But there's a good correlation between the two. So that's the first thing to consider today. The second thing to consider is how the US 2-year yield is behaving. The 2-year yield is very much a proxy for Fed monetary policy. We've got the 2-year yield in the top chart, we've got the US dollar in the second chart, and then we've got the correlation coefficient of the two in the bottom. There's always been a strong correlation coefficient since the July 2020, so to speak. It's dipped slightly. I'll show you why it's dipped in a moment, but you can see that last week after the jobs data, there was a movement off of the lows of the 2-year yield, and hawks push price up. They haven't been able to follow through. Okay, that's significant. The fact that the hawks aren't following through, I think they are recognizing the fact that we are near the apex. There's still a certain amount of uncertainty here because we've got an inside period. In other words, this week's candle has got a lower high than last week's candle. It's got a higher low than last week's candle. Hawks aren't pushing aren't pushing yields up, but doves aren't pushing yields down at the bottom. We kind of stuck right in the middle here. It gets interesting when we look at the daily chart. Just before I look at the daily chart, there is a divergence between the 2-year yield. Okay, so you can see that there's a lower trough on the 2-year yield, and there's a higher trough, I beg your pardon, on the dollar, and that's why you've got this sort of divergence in the correlation coefficient. We'll see there's two ways, obviously, that can catch up. Either this moves down, which would be in line with the head and shoulders topping pattern we've been looking at, or this moves up. But I don't see how it moves up because I think we're near the end of that hiking cycle. The question is, do we get interest rate cuts in the second half of the year? There's a big question mark there. The CME Fed Watch tool. So if we just bring up the CME Fed Watch tool, so we're currently at 475 to 500 range. It's quite likely that we go through to the 500 to 525 range. If you take a look at the way the market is pricing the end of the year, they're seeing the majority is seeing 425 to 450. So they are pricing in cuts. So the market's pricing in cuts. The Fed certainly not pricing in cuts, but the Fed minutes did suggest that there may be a recession towards the second half of the year. Why would there be a recession? They point towards the banking crisis. That banking crisis suggests some sort of recession, depending on how hard or soft in terms of landing it is. That's going to have an effect on whether the rates come down or not. A hard landing has a higher percentage probability that rates will be declining in the second half. So we just got to watch for signs of the recession. If we just go back to the 2-year and the US dollar, this is where it gets interesting for us as traders. If we go through to the daily chart here, let's take this out. Let's take this out. Let's take out the correlation. So the 2-year yield still needs to show signs of a turning point. We've got the signs on the dollar of the turning point. Again, the divergence in terms of the correlation coming through here. So if you just take a look at the US dollar, the US dollar does look a lot weaker after yesterday's data. You've got a I want an ellipse. You've got a the highest high, and then yesterday actually takes out this reference candle's low, and it looks as if we've got a turning point here. And this turning point suggests dollar weakness. If it suggests dollar weakness, well then of course we can start looking at a potential counter to that. So we'll take a look at Euro US dollar next. I'd like to see the correlation catch up on the US 2-year yield. The US 2-year yield here lagging slightly. Let's just go ahead and bring up Euro US dollar. And remember yesterday we said 110 is in focus. Well, we are a lot closer now. Look how close we are to 110. We're about 11 pips away from 110. And then sort of 115 comes into a potential sort of target for the second half. I'm not sure if we can get to 115, but we'll keep an eye on the peaks and troughs. So you can see the Euro US dollar trough, peak, higher trough, higher peak, higher trough, higher peak, higher trough. We've almost got the next higher peak in. We're not quite there yet, but take a look at this RSI. The RSI is nicely above 50. Well, if it's nicely above 50 and it holds, then I think this 110 is just a matter of time before it falls. If you take a look at the zone analysis here, you can see it's looking very positive. It's in zone 1, so it's between the upper red and the upper blue. Okay, take a look at the stochastic. Stochastic's made its way to the upper quintile. If we hold the upper quintile, then the longer we hold the upper quintile, the greater the probability of higher prices, the greater the probability that that 110 gets breached. Well, if that 110 gets breached, okay, let's take a look at the hourly chart and see in terms of timing how that's going to happen. Well, we need to see a angle and separation here on the EMAs. So we need to see the EMAs moving in that northeasterly direction. And what we would need to do is wait for the stochastic to cross as well. So we're still waiting for the two triggers on the euro US dollar. But if those euro US dollar triggers do manifest, okay, then we want to keep an eye on the upper quintile. And the longer it holds this upper quintile, the stronger the likelihood that that 110 falls. You can see here it's holding sort of the 110. What am I talking about? It's holding the upper quintile, and you get a really terrific swing with the euro US dollar. A really nice swing taking place there. So keep an eye on euro US dollar. And let's just take a look at DAX as well. So let's bring up GR30. All right, and we'll go through to the weekly and do a top-down analysis here. And again, I think this is a terrific looking chart. Higher trough, higher peak, higher trough, higher peak. I've put in a trend line. The trend line's defining the momentum. It's a good looking RSI, nicely above 50, holding, just keeping between 50 and 80. That's exactly what we want to see. And if we go down to the daily chart here, it's in zone 1. Look where the stochastic is. The longer we hold in that upper quintile, the greater the likelihood of higher prices ahead. Let's just go through to the hourly chart here. And let's just get rid of all the studies. And this, to me, is a very interesting start to the day. Look at this for us, the start to the day. You've got a potential cross here. So almost trigger 1, almost trigger 2. We just need confirmation. The confirmation comes in 7 minutes. In 7 minutes, we'll get the next candle. And assuming that we get the crossovers, well, then again, keep an eye on the upper quintile. Upper quintile now becomes extremely important. We reach that upper quintile, we get swings. That's where the magic happens, where it hugs the upper quintile. So you can see that there is a nice looking chart at the moment. Whether it turns into something much more sort of positive, that we will only know if we get to the upper quintile and hold. But it does look very interesting indeed. We're getting near the end of the rate hiking cycles. That tends to be positive. The one headwind that we're going to talk about tomorrow is really the prospect of recession. What does recession mean? Just to give you a clue of what we'll be discussing tomorrow, it's that time value of money formula where we look at the future value interaction against the interest rate interaction. And I think tomorrow we'll have to just do it in a little bit more detail. We haven't looked at the mathematics for in any real detail for quite some time. So I think we're going to do that tomorrow. So just sort of prepare yourselves for that. But the hourly chart on the DAX looking very interesting, and the hourly chart on the euro looking very interesting. It all depends now on the triggers and whether we can make our ways to the upper quintile. All right, that's what I have for you guys this morning. If there's any questions, please go ahead and type those in. just to reconfirm, we will be doing the Crypto Minute next week on Wednesday. All right. Let's wrap up here then, guys. I want to wish everyone a good day ahead, a good evening ahead, and we'll catch up tomorrow. Tomorrow we'll do a little bit more in terms of the mathematics. Thanks very much, guys.